Hello again, Michael O'Brien here, and welcome to another video we've put together to help our clients navigate through the Chapter 13 bankruptcy process in Oregon. This is a rather long and important video, but because the internet knows no boundaries, it's important that I make some brief disclosures before we get to it. Michael O'Brien and Associates is a law firm based in Oregon. We help honest Oregonians solve financial problems and restore long-term financial stability. We often, but not always, do that through the filing of bankruptcy petitions. We are proud to be recognized under federal law as a debt relief agency. Nothing in this video establishes an attorney-client relationship with us. The only way that an attorney-client relationship can be established with my firm is through the signing of a written agreement by both you and the firm. Okay, now that my lawyers are happy with me, let's get to it. When the Chapter 13 plan was approved by the judge, an order was entered by that judge, and part of that order requires you to file all of your tax returns on time while you're going through this bankruptcy process. Now, as you know, tax returns are generally due in mid-April of each year. If you are unable to file a return on time in mid-April, it is okay to file an extension. In those circumstances, it's important that you send the extension to my firm. Starting in late April, the bankruptcy trustee will start bugging me and my staff with all the clients who haven't filed tax returns yet. And when we're getting bugged, we're going to bug you for it. So just send us the extension once it's filed. We'll provide it to the trustee, and then we'll reset that deadline into mid-October. Okay? Now, when you do file the return, file them as normal with the taxing agency, state or federal. There's no special address they may need to be sent to. And there's nothing in the bankruptcy code that requires you to notify your CPA that you're in bankruptcy. Little caveat there are some circumstances for a business owner where the bankruptcy filing would be relevant. But for most cases, you don't have to tell your CPA you filed bankruptcy. Just file the tax returns as normal. Send copies to us. Now, when we get your tax returns, we're going to review them for compliance with your bankruptcy plan. There's 3 or 4 things we're looking at which are potential problems in a bankruptcy. And we don't want those potential problems to be real. We want to anticipate, prevent, and overcome them in advance. As Ben Franklin said, an ounce of prevention is worth a pound of cure. And by the way, Ben Franklin really did say that in 1736, when he was trying to convince the residents of Philadelphia to join up and have some communal fire prevention. He told them, look, let's prevent the fire from starting in the first place because it's cheaper than putting the fire out afterwards. Dr. Ben Franklin. Okay, tax refunds. Big question that everyone has. What about my refunds? That same order signed by the judge requires that tax refunds be paid into the bankruptcy plan. Now, that general rule can be modified very specific to your unique situation, all right? So if there's a question about how much of the refunds must be paid in, you'll want to reach out to my team so we can review your case in detail. But in general, refunds come to you. You don't want to spend them because they may have to be paid into the bankruptcy. A question often comes up, what if I'm married and my spouse is not in the bankruptcy? Fair enough. Your spouse doesn't have to pay their tax refunds into your bankruptcy case. And so in those situations, we'll work with the bankruptcy trustee to determine how much of the refund was attributable to your income and how much of the refund was attributable to your spouse's income. And once we have an agreement with the trustee, we'll discuss that with you, and only your refund must be paid into the bankruptcy case. I also frequently get asked about the cost of tax preparation, and can an individual reduce the tax refund by the cost of preparation of the return so that they only pay a lesser amount to the trustee? I've spent 30 years arguing with our trustee on this very issue and have gotten nowhere. So the short answer is no. You cannot deduct the cost of tax preparation from the refund. You'll have to pay the whole refund into the bankruptcy case. All right, what if you're not required to file at all? Well, we have many clients that are required to file tax returns, and that's okay. In those circumstances, if your income was below the threshold so that there's no filing requirement, we can obtain a form from the taxing agencies. We'll send it to you, you'll sign it, and we'll provide that to the bankruptcy trustee, and that will satisfy this requirement. Okay, that's a lot of information on tax refunds. I know it happens once a year. We get lots of questions from our clients each year, which is why we wanted to put together a brief little video summarizing these things. If you have other questions specific to your case, you know how to get a hold of us. We're here to help. Thanks.